Has anyone ever suggested to you that you should buy a specific stock? How do you know it's a good time to actually get into that stock? And in our case, purchase an option in that position. Let me show you a quick way you can tell if it's a good time to buy an option in that stock. This is the ETF SPX. If you don't know what an ETF is, just think about a specific stock such as Amazon as an item on the grocery store shelf, along with other stocks such as Citigroup and Comcast on that same shelf. An ETF would just be the whole shelf of stocks together. In this visual, SPX is trading at close to 4,800. If you were thinking about purchasing this ETF, how do you know it's a good time to get into this position? Let me take you through the whole process of what I did to make money on this ETF. Okay, here's the same chart, but now we are looking at indicators that will help us make a decision. The date is January 3rd. Let's look at a few things that are telling me what direction the stock is about to go in. Typically, I need 2 or 3 indicators telling me the same thing in order to make an option purchase. The first one we see here are the Bollinger Bands, which are these blue lines. Stocks will typically stay within these blue lines. If the stock ever touches these Bollinger Bands, there is a chance it will reverse back within the blue lines. You can see here today, SPX is touching the top of these blue lines, which means I'm anticipating it coming back down within these blue lines, similar to what happened here recently. Okay, that's one indicator, but it's not enough. Let's take a look at the right side of the screen. The top image is a TTM squeeze. The dark blue indicates a reversal of the current trend, which could mean this upward trend of the SPX could be ending temporarily. Also, these purple lines are called RSI indicators. When it's above this blue line here, it's in the overbought zone, which just means too many people have purchased it at the current time, so it's going to likely have a trend reversal. So now that's 2 indicators telling me the same thing, that this stock is about to come down some. At the moment, it's currently trading at 4,796. Let's say you purchased it blindly, not paying attention to the indicators. Now let's take a look at this stock just 3 weeks later. It dropped down to around 4,300. Just using those indicators, you could have easily anticipated this drop. Let's look at those same indicators now. They have both dropped like we thought they would. The dark blue lines have descended downward, and the purple RSI lines have also dropped like we anticipated. So how do we know when to get back in? I will be transparent in telling you guessing the rise of a stock can be difficult and hard to time. What I do is use those indicators and others to my advantage. Let's revisit the Bollinger Bands. Now the date is February 23rd. Remember I told you that the stock will typically try to trade within those blue Bollinger Band lines. Today we see how the stock has dipped outside those blue lines, which means a trend reversal and an upward move may be imminent. However, we don't move off one indicator. Our RSI is now in the oversold zone below this blue line, which means a trend reversal upwards could be soon coming. That's 2 indicators telling me the same thing, that this is going back up, at least temporarily. As such, we are entering into a put credit spread position. I'm not going to fully explain that position in this video. Visit poweroptiongeek.com for that. What I will do is tell you that it is a bullish or upwards position. I'm risking $1,050 for a potential max profit of $950. So the most I can lose is $1,050 and the most I can make is $950, which is a pretty good ratio. Typically for my trades, I exit my position when I reach half of that max profit. However, for this video and the fact that I'm so confident in this position, I'm going to hold this until I get close to max profit, which should be pretty easy. With SPX trading at 4,225, all I need is a slight rise in its position to make significant profits in its option trade, with 4,330 being the minimum point I need to get to at least break even. So revisiting the day I entered my position, this was the chart at the end of the day on February 23rd when I bought my option trade. Here it is a little more than a month later. It went up exactly as we anticipated, and it is now trading way higher than when we purchased it at. You can also see my indicators rose as well. The RSI rose out of the oversold zone, and the TTM squeeze went on a bullish run upwards as well. Now we can see it trading at $4,531 on my analyzer, way above where we actually need it, and you can now see our current profit of $950. Let's look at the breakdown of my trade. On February 23rd, I did a put credit spread. So I received a $950 credit from this trade, meaning at the beginning of this trade, they gave me $950 up front, with the idea that I would give the option back to the market when I was done with it. Whatever price I give it back to the market at, I would subtract that price from my initial $950 credit and keep the difference. So I received a $950 credit on February 23rd. The trade worked out in our favor, and I sold the option back to the market for $5, keeping the difference between the two, which is $945. Again, if you want a breakdown of how these prices work and how credit spreads work, visit poweroptionsgeek.com. But I hope this helps you the next time someone says you should buy a specific stock. Do your due diligence and make sure you're buying at the right time.